Day report. We head to the top of the hour. Let's head to Chicago. Our last update in the grain and livestock trade. Todd Horwitz joining us live from the floor at the CME Group. Another active day in this grain trade. Well, you might say active in livestock, another direction. We'll get to that in a minute. Todd, thanks for joining us today and your thoughts here. You watch us every day. And you were saying, I guess, makes it really important point. What you've always been preaching is have a plan in place and you don't need to worry about these day-to-day swings that we're seeing right now.
That is 100% correct, Mark. Right now, we're seeing a market that is basically going parabolic. Now, if you ever look at a chart, what you're going to see is you're going to see it going straight up. The rate at which this market is changing cannot be sustained, and what you're really seeing here, in my opinion, is a dramatic short covering rally. Take a look at the volume versus the price. You have buyers coming in now that don't care about price. They don't care about time. They're just buying because they're stuck. And this is what we looked for. You remember we talked about this a couple of months ago. The shorts kept selling into it. And I said, there's no more bad news. What's going to happen? Well, now you're seeing them pay for it. Now, I would expect to see from these levels most likely a sell-off. Now, I'm not looking for a dramatic sell-off like we're going to turn over. I want to see the action off of this, but this particular move is purely based on short covering and fear, and they're driving prices straight up on very heavy volume. So what's going to happen when the buyers and the fear finally runs out, we will see some kind of retracement, and then we'll get a better decision on where we're going to go from here. But right now, this move is purely being driven by shorts and not by anything else.
Well, whatever is driving it, a producer out there would say it's where prices are a lot better than they were the 1st of April, just 20 days into the month. What would you say to that producer about what they may or may not want to do?
Well, I think that this is we said for months, let's hold on. Now you've got some higher prices. So now you've got to make a decision. Either empty out some of those storage, those bins that you've been holding, or you want to hedge yourself. This is you just gotten a gift. You got a 40-cent move in corn, you've got about an 80-cent move in soybeans, and we just had a 35-cent move in wheat in 3 days. This is the time to say, hey, let me lock some of that money up. I don't have to sell here, but let me lock some of it up at these higher prices. So if we do fall back down, I'm protected now at these levels, and I'm not sweating out down at the lower levels where I was all last year. So this is the time you either want to take a little bit off the table or you want to hedge. I'm always a hedger because we don't know that this is not going to be a big market. What we know now is that in the short term, we're seeing a short squeeze, but this could continue after the markets consolidate again and go higher. So the overall picture is either protect yourself or take some of the risk off the table now, because you've just gotten a very big rally across the board in all three.
And if you don't want to sell the grains, if you do a little bit of that, but you're going to take that position via options market, am I correct?
Absolutely. You're going to put yourself in a position that you're not going to have to commit to a price you want to sell at, but you're going to commit to where you want to protect it. So if you wanted to protect your corn right now at, let's say, 380 or 385, you can do that and set up a synthetic position that will keep you in the markets. So if we keep going higher, you can continue to move that up and protect underneath it while the prices are moving in your direction. Whereas if we go straight down, and that could happen, you're now protected. You've locked in a higher basis, and that's the most important thing we can do, is always control the basis of what we own, because we do have fixed costs when we put these things together and we do our marketing plan. We know what our costs are. Let's make sure we lock it in and maybe able to lock in with a profit.
5 to 6.5 higher in corn. That's those of you tuning in on the radio real quick. And soybeans turning around here. Now everything higher. Even that new crop November, which was not higher half an hour ago, is now up 2 1/4 and 9.98 1/4. Everything else above $10 in beans. And our wheat trade now double digits in Chicago. 13.5 higher in May. We are double digits in Kansas City. Higher there. The nearby May up 12. Minneapolis May is up 8.5 at 5.46. More from Todd Horwitz in 1 minute. The livestock trade coming up.